Generally speaking, the economic cycle, and I'll use the ISM survey, Institute of Supply Managers survey from the US as the best guide, has been subdued. So even though we've had equity markets and stuff very strong, the economy's been subdued. So normally a growing economy, you should see the ISM above 50. GDP's actually been reasonably good, but there's something going on in the kind of manufacturing sector that is still sluggish. So the cycle has still been relatively slow, which has created this bifurcation of like tech stocks, which are not based on, debt dynamics or real world expenditures. It's a very separate kind of cash flow that they're earning. The traditional economy has been sluggish.
In today's market analysis, we're diving deep into the mind of Raoul, the CEO and co-founder of Real Vision, to unpack his latest perspectives on the global economy, crypto, AI, and what it all means for you as an investor. Get ready for some explosive insights you won't find anywhere else. Before we delve into the video, if you want the latest crypto news, market updates, and expert insights from the top minds in the industry, be sure to hit that subscribe button and turn on notifications. Stay informed, stay ahead, and never miss an opportunity in this ever-changing world of the financial market. Thank you for subscribing to our channel. Raoul kicks things off with a broad look at the global economy. He notes a slowdown in the manufacturing sector, pointing towards potential challenges ahead. China's economic struggles, particularly its debt deflation issues, are a significant concern. He brings up the demographic challenges facing many countries, emphasizing the long-term economic impact of these shifts. He then zooms in on the US, highlighting the widening wealth disparity. Many people are feeling the pinch of inflation and the rising cost of living. Raoul observes that interest rates play a crucial role in shaping economic growth, but there's no simple solution. Raoul discusses the potential impact of Trump's economic policies, focusing on trade, tariffs, and their effect on the global economic landscape. He notes that China's economic health is vital to the global economy, and any significant disruptions there could have ripple effects worldwide. Let's watch Raoul's full video interview.
Generally speaking, the economic cycle, and I'll use the ISM survey, Institute of Supply Managers survey from the US as the best guide, has been subdued. So even though we've had equity markets and stuff very strong, the economy's been subdued. So normally a growing economy, you should see the ISM above 50. GDP's actually been reasonably good, but there's something going on in the kind of manufacturing sector that is still sluggish. So the cycle has still been relatively slow, which has created this bifurcation of like tech stocks, which are not based on, debt dynamics or real world expenditures. It's a very separate kind of cash flow that they're earning. The traditional economy has been sluggish. Globally, Europe's slow. They haven't picked up yet either. The UK is a bit of a mess. Canada's slow. And then we go to China, and China's got a full-on debt deflation playing out. So bond yields are collapsing. They can't stimulate because their currency's too weak and they don't want to lose control of their currency. Everybody's desperate for the US to weaken the dollar because the dollar's way too strong for everybody. So the strong dollar usually slows the global cycle. Now Trump's coming in. The probability is he'll do the same as he did last time, which was the dollar's too strong because the US needs to export goods. And a strong dollar means less exports, which means a larger trade deficit. So we're kind of a little bit in this no man's land where everything is slow. All the forward-looking indicators of the economy are suggesting, because the liquidity that went in and financial conditions over the last 6 months, they tend to be forward-leading, suggest that the economy should pick up significantly this year. Now, China's the one problem child. We have to, as I said, see the dollar weaken, but also the Chinese need room to stimulate. So then they can try and stimulate their economy. Now, the reason they're seeing this debt deflation is the same that we've all had similar issues, is too much debt, aging population, doesn't generate enough GDP growth to service the debts. And what you get is this big problem. And they've got it in the real estate sector, much like we all had back in 2008 and 2012 in Europe. They've got it in the banking system, much like everyone had in 2008 and 2012 in Europe. They've got the same set of problems because their demographics just are falling off a cliff.
So you expressed some concern about the U.S. economy, and when I look at the U.S. economy, and I see the same thing in Canada, but it's like you have two different economies. You have people that are doing extremely well, and then you have another group that are not doing well. And in spite of the fact that the government is saying the economy or the GDP is growing at 2.5 to 3%, they say they got inflation under control. The S&P and the Nasdaq trading at or near all-time highs. There's still this sense that things are not really as strong as they are. Do you have any other concerns about the U.S. economy, and where do you see it going this year? Do you
So
think it
I don't
continues to
have.
chug along at 2.5 to 3%?
Yeah, I don't have any structural issues with the U.S. economy. I think that bifurcation of the two different worlds people live in is real. Don't forget the average person is dealing with very high mortgage rates, very high credit card debt interest rates. They're dealing with still low cash flows from their regular businesses. We're not talking about tech giants here who are changing the world. We're just talking about people who run small local businesses. It's still not great. And we have to get rates lower and stuff for that to happen. And the inflation, yes, the rate of inflation's come down, but the price is stuck. It's still sticker shock every time you go anywhere for dinner. You're like, oh my God, how did this happen? These prices have doubled. That's a real problem. And what we need is the economy to grow. Now, Trump and his team know this. Scott Bessent, somebody I've known for a long time because he was an ex-hedge fund guy, and he's a friend of mine. I haven't spoken to him for a while, but he understands what needs to be done, and that's we need to get growth. So growth to me is, yes, you need to get interest rates lower. Yes, you need to get the dollar lower. Yes, you need to stimulate the US economy. You need to deregulate the economy. So all of those things on a forward basis suggest that the economy will be much stronger. Whether GDP changes much below, trend rate of GDP growth roughly is about 2% or just below it. We've been trending higher recently. Do we go much higher? Do we have a few periods of 3.5% growth? Maybe, probable. When you have a new administration, there's tax cuts, there's all of that stuff. You tend to do that, and Trump is very driven by the economy more than anything else. So I'm optimistic. Do the Europeans manage to get their shit together or not? That's a different issue, because they are doing the opposite. They just keep increasing regulation, increasing tax, making it harder for people. But they have the difference, they have a social security net. So it's a different structural system. And then we do need China, because China buys goods from abroad. They don't just sell them to us. They also buy stuff from us. And if they're on their knees with their economy, they're going to be buying less goods. So we need the global economic system to get fired up. So we need the US Trump to do what he's suggesting he's doing, and allow the Chinese to figure out what they need to do.
You are so right about inflation being sticky. And I noticed that in Toronto. Like, I was in Whole Foods the other day, and their beef tenderloin, something I enjoy very much, was $60 a pound. Okay. And that's Canadian. So that's probably 45 US. And it wasn't that many years ago when it was $30. Okay. That's and right. Those prices are never coming down again.
I was in New York City, and I went out for 2 dinners, and I was on my own. I was having to go to some event, so I thought I'd just round my hotel, go for dinner. First night was a pretty crappy steak restaurant, and I had 2 glasses of wine, a steak, and a salad. It was $180. And the following night was a nice restaurant, but again, it was $300 on my own. I'm like, this is insane. And you go to Spain, for example, where I spent, I lived 10 years in Spain. I had a house there for 20 something years. You can go to a 3-star Michelin restaurant, go high end on the wine list in one of the best restaurants in the world, and it will cost you 250 euros. So we've got some real problems here somewhere.
100%. So Stan Druckenmiller has stated that the biggest risk he sees to 2025 is this reacceleration of inflation. Paul Tudor Jones had similar comments. He said all roads lead to inflation. And I think their concern is that lower taxes, higher tariffs, deregulation, deportation will all be inflationary. What are your thoughts on that?
I am not an inflationist. The business cycle, when it picks up, will create some inflation again because oil prices will eventually rise and stuff like that. But I'm not an inflationist. There's two different things going on. There's debasement of currency that inflates asset prices. That's continuing. Inflation itself, I see less so. And all I see ahead is a tsunami of technology that is so deflationary we can't get our heads around it.
In conclusion, Raoul Pal paints a complex picture of the global economy in 2025. While challenges exist, particularly around inflation, debt, and geopolitical risk, there are also tremendous opportunities for investors who are willing to embrace change and adapt to new technologies like AI. By staying informed, diversifying their portfolios, and focusing on long-term trends, investors can position themselves for success in the years ahead. That was a breakdown of Raoul Pal's key insights. Don't forget to like and subscribe for more in-depth analyses of the financial markets. And remember, this is just one perspective. Always do your own research and consult with a financial advisor before making any investment decisions. Disclaimer: this is not financial advice. Always do your own research before investing.